please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be a day where we've given up all of our gains. So we've just about flat for the Nifty as we speak. We're up only around 12.5 odd points. What stands out is the kind of underperformance that we're seeing for the mid-cap index as well. We already have a negative advance decline ratio on our hands, so do watch out for that. For the entire week itself, it's been hardly any sort of movement that we've seen both for the Nifty as well as for the mid-cap index. The Nifty at current reckoning for the week is up around 1% or close to that level, and the mid-cap index is just about flat as we speak for the entire week. Lot of stocks in focus. We have a lot of stocks to discuss. So Gitanjali Gems back down around 19% in lower circuit. We have PNB, which is down another 2.5% today, and something like Indico Remedies, which is managing to buck the trend. That stock up around 3%. Hi, Prashant.
Ekta, hi. I mean, so what is surprising is that the US market strength for 2 days now has not been reflecting here. Actually, just compare what's happened in the US in the last 3 days, just open to close, and look at what's happened here over the last 3 days. And the market here seems to be underperforming, but 2 or 3 days doesn't really mean anything. It could be some idiosyncratic factors here. We've had one of those, which is Punjab National Bank, which is a very local issue, and that is kind of sort of taken the punch out of the recovery. Macro as well. So take a look at the
$16 billion.
Yeah, and take a look at the 10-year yesterday. Yeah. That spiked up. So it's just 2 or 3 days that we've had these issues, but the fact is that the market here is not recovering. I was looking at the futures, the US futures, they're still higher. It's not as if there is anything which has happened today for the market to climb down like it has. So let's keep our fingers crossed, and let's hope that the US at least keeps recovering, because you don't want a situation where you're fighting bearish cues locally and you've got a global market which is also not supportive. So far it's been supportive, even if one of the side effects of that has been the fact that oil prices have come back up above $60-61 or so. Let's get some trading ideas on. Sandeep Wagle is founder and CEO at powermywealth.com. He's with us. Sandeep, good morning. What's your sense on the market, and what would you trade?
Good morning, Prashant. I would say that at higher levels we are witnessing some selling, and 10,600 sounds very difficult to cross. So with a stop loss of 10,630, 640, I would look at playing on the downside for around 10,400, 10,360, that range. Stock specific, I would sell a Voltas if 580 is broken on the downside with a stop loss of 585, target of 569. And the second call would also be a sell in a Motherson Sumi that has given a very clear breakdown. Sell it with a stop loss of 333 for a target of 310.
Okay, well, in terms of stocks, what would you be strategizing besides what you've already highlighted, maybe in terms of the broader markets or going into next week?
Well, at higher levels, as I said, we are witnessing a sell-off, but a sell-off is not that broad where we are seeing it's a kind of a profit booking and a play within that 200-point range. So I think one has to be extremely careful. Stock specific, banking is still looking weak. I don't think one should try and do any bottom fishing if you ask me anything specific as a sector and stocks within that. So I would still wait to buy, or maybe on a little bit of a bounce back they can still be sold.
Just specifically the commodities, metals complex, Sandeep, looking weakish, or maybe one of the stronger sectors there?
Prashant, metals is a space which is looking strong. Though today's correction can be bought into for the next 1 or 2 days, specifically a Hindalco or an Alco. I see higher levels. So as a trade for the next day or 2 or 3, there will be some 5 to 7% trading upside, and the metals can be an outperformer.
Okay, well, let's get in a couple of Twitter queries for you now, Sandeep. First one is Ramesh wants to know if the following stocks are a good buy at current price levels. That's Bajaj Finance, Federal Bank, as well as India Cements.
Well, Bajaj Finance is not looking weak, but with the kind of the view that I hold on the Nifty, I think he'll get in lower levels, maybe somewhere around 1620, 1630. Federal Bank, I would avoid the stocks in the banking space I just mentioned. I expect lower levels. Cement space, again, India cement specifically is very, very sideways, 150, 160, that range. So I would better avoid.
Sandeep, thanks very much. Appreciate you joining in with that, and we will speak with you soon again. Chris Subramaniam is also with us with some F&O trade setups. Chris, morning. You got all sales today?
Yeah, morning, Prashant. Market definitely looking a bit tentative, and we have seen that levels of closer to 10,600, we are seeing some sort of selling pressure. So keeping the selling bias in mind, it's recommending selling off Nifty for a possible target of 10,400, and maybe one could keep a stop loss of 10,625. And a couple of metal counters, I feel that this could be more of a bounce back. They have had stellar run-ups in the last few months, but Hindalco has seen a very strong bounce past levels of 250. But I think this could be some sort of a short covering rally, so it could be possibly sold for a possible target of 240. And one could keep a stop loss of 255, 56. And third one is Vedanta, which has been one of the relative underperformers in the sector. Could be sold for a possible target of 300. Maybe one could keep a stop loss of 320 thereabouts.
Okay. Fair enough. We're going to let you go now, Krish. Thanks very much for joining in and taking us through all of those strategies. Just want to point out Bombay Dyeing, because that stock is actually up only around 1% today. But if you look at it in a index, in terms of the broader markets, the mid-cap index has been absolutely flat on a week-to-date basis. But this stock has done quite well. It's up around 15% for the entire week. So do watch out for Bombay Dyeing. And the other one has to be something like a Religare, which is down 1.6%. There's been so much news with regards to the Singh brothers in the past couple of days. So that Religare stock, for example, has gained around 16 or rather 13 to 14% on a week-to-date basis. So these are a couple of stocks that you need to just keep on your radar. But we'll take a break now. Up next, we're going to be discussing what's happening in the commodity space, especially in the metal space. We'll have Manisha Gupta talking to us next. Stay tuned.
So the market is down about 5 points. And this is a steep climb down from where we were trading at the high point of the day, as we were pointing out. The high today was 10,612, and we are at 10,540. So that's basically 55, 60 odd points climbed down already, and it's just a little past 11 right now. Will this become a bit of a trending day on one side? We'll have to see. But there is no indication from global markets that it should. But what we've had for the last few days has been a lot of local factors pushing things down here. The other factor this morning which came through was MSCI, which essentially provides indices on which a lot of passive money is benchmarked to. I mean, you got the MSCI World Indices, all kinds of indices, MSCI India Index, etc. MSCI issuing a release essentially condemning the move to kill SGX Nifty, the local exchanges move to stop the SGX Nifty trading. We have Deepan Mehta, member of the BSE and NSE, now joining us to talk about that. Deepan, thanks very much. Your first reaction on the comment by MSCI, and whether this is just going to be the written word or will actions follow?
No, I think the entire situation is not as simple as it appears, because there was no doubt that a lot of business was flowing out of India into SGX and some of the other global exchanges. And the government had to do something about it. So which is why I think in their wisdom, they thought this was the best step to do it. And certainly it's going to impact the sentiment towards India, because a lot of funds are benchmarked to MSCI, and MSCI has got many products also based on Indian and Asian indices, which are tracked, and which there are products and contracts also written on various MSCI index, which are traded offshore on the OTC markets elsewhere as well. So it is something which the government and regulators will certainly have to consider, MSCI being the premier index agency, so to speak. But the real issue over here is the transaction costs in India and the taxation structure in India, which is essentially so high. It's a multiple of what is there globally. Nowhere in the world you have stamp duty and STT, and then you have long-term capital gains tax and short-term capital gains tax as well. So it's about the RBI governor also said that there is just too much of taxation on capital.
Yeah.
And that's one of the major elements.
Sure.
But in a way, the new budget has made level playing field as far as the GIFT City is concerned. So it will
maybe this will give a big boost to that. Deepan, just a quick point, just to stick to the MSCI bid. You know, as you said, MSCI, there is trading which happens in MSCI India futures contracts. This could be OTC, etc. Yes. Those could stop directly as a result of the action by the exchanges, right? But that is not what people are worried about. I mean, that's an instrument on which trading can stop. But what's worrying is whether this has any impact on, India's weight and things like that. I mean, do you think that's likely in any way, or one needs to study this a bit more because there are lots of things which go into that weight?
See, of course, it's going to have a temporary effect because if you're managing a fund based on benchmarking on the MSCI, then certainly, you're going to rejig your portfolio accordingly. But then, we have very powerful indices in India as well. Sensex, Nifty are also popular and have great deal of credibility and respectability and following as well. So, fund managers who want to get into India will therefore tweak their benchmarks and tweak their investment strategies to look at the indices which are coming out of India. At the same time, nothing is stopping the present index management companies to launch products which are similar to MSCI. And they could consider even other Asian markets or global markets. So, sure, in the immediate short term, that will have an effect. But if there is a demand for a MSCI equivalent index coming out of India, then I'm sure the index management companies which are owned by BSE and NSE will step in and launch such indices, and that can be done quite easily. We have the wherewithal, and so it's not that difficult situation.
Deepan, just a two-part question before we let you go. Is there a chance that the exchanges, the NSE, BSE might in fact rethink their decision based on what MSCI is saying? And secondly, do you think that if the decision stays, eventually there could be a disruption in terms of the kind of FII flow or participation for our market?
See, whether the exchanges is reconsidered or not, that is very difficult to answer. And I think that this is not a recent problem. It's been there's a lot of thought process which has gone into it. And I was seeing the interview of the NSE chairman also on your channel, and it was not. He was also indicating that some sort of action needed to be taken. So I think the regulators and the exchanges have thought through this process. It's not a knee-jerk reaction. And that means that withdrawing it is quite unlikely. As regards disruption, I think it needs to be seen. See, if on the whole, if a destination is attractive, then money will flow. Whether there's an index, there is no index, money will flow if India is an attractive destination. There may be a few, speed breakers on the way, and India still remains a very attractive destination for FIIs. Only problem they have is the valuation. And with the earnings season the way we have, and if you have a minor correction, then valuation comfort also will come through. So I'm not too much worried on the trading disruption part, and I don't expect massive FII selling just because, there's some changes happening at the index level also.
Okay, fair enough. Deepan, we're going to let you go on that note. Thanks very much for joining in and talking to us. So that's the quick take coming in from Deepan Mehta, member BSE and NSE. But let's shift focus in terms of what's happening in the commodity and the currency space. We have Manisha Gupta joining in to tell us more. Manisha, over to you. Metals.
Yeah, absolutely. Thank you so much for that, Ekta. Well, that is one sector which has been doing quite well, and the major reason in the global markets, of course, has been the weakness in US dollar, where you have the dollar trading at a 15-month lows versus the Japanese yen. The dollar index itself is trading at a 2-week lows, and that clearly has been supportive. If you look at the US inflation markets, inflation, the concerns coming in from there, the weak retail sales are a couple of factors which have pulled the dollar on the lower side. But that clearly has been quite supportive for the metals as a space, because zinc is trading at the highest since 2007. So it's a decade high coming in for that. Remember, zinc prices almost have doubled in last 24 months, and the fundamentals still continue to be quite positive. The other outperformer clearly for this week has been the nickel prices. That one is trading at a 3-year highs. Nickel is a major ingredient for steel, and the kind of demand expectations that we have going forward for this year and the next for steel is something that has been keeping those prices on the higher side as well. Copper also is headed for a biggest weekly gain since the month of November. So overall, wherever you look, we are closing this week quite on the positive side for the metals as a space. As I mentioned, nickel has been an outperformer for this week, up by nearly 7.5%. Copper is up 6.5%. You have zinc at 5.5% up for this week. There have been gains for other metals like lead and tin as well, and not too far behind are the precious metals, where you have the gold and silver prices as well up by nearly 3% for this week. So every place that you look, especially when it comes to the metals as a sector, you are looking at very strong gains coming in for that space. Prathamesh Malia now joins us with his sense on that sector. Prathamesh, hi, what are you picking up when it comes to metals? Because almost everything is trading on a multi-month or a multi-year highs.
Morning, Manisha. I think the dollar is a theme that's being consistent with metals, whether it be precious or whether it be industrial. I think in the metals pack, as you rightly mentioned, copper 3% gain this week. I think it is headed further higher towards 464, 465. Hence, the strategy advised would be on the buying side. 458 would be the entry point, 453 would be the stop, and the target higher towards 465.
What is your sense also for the precious metal prices? Because gold and silver both around 3% up. The weakness in US dollar has been supportive here as well. But for gold, as we are hitting those important resistance levels at around 1360 in the global markets, how would you want to strategize that?
I think I would place a bet on the sales side if you're really asking me in the near-term strategy. 1366 is what the resistance when it previously it was corrected. But just going with the momentum, I think it would be better be on the buy side for gold as well as silver. I think 30,850, 30,900 seems to be there on the cards. While as far as silver goes, 39,000 seems to be the next possible move as far as both metals are concerned.
For gold, essentially, Prathamesh, we are awaiting a gold policy which is expected to come into being by the month of March. There are those hallmarking numbers expected to be coming in by this month end as well. Do you see all of that changing the Indian dynamics when it comes to gold buying here?
Yes, but whatever be the industrial scenario, whether it be hallmarking, whether it be certifications, I think the demand for gold in India would consistently remain on the higher side. Whether it be higher import duty, whether it be lower import duty, I think you really cannot disturb the demand side. And yes, as per WGC, the demand side for 2018 also looks bright. So I think hallmarking is just a way of standardization of gold markets in India. It is a welcome process. It should have a good impact on the gold industry in India.
Okay.
A lot of stocks continue to be in focus. So something like Gitanjali Gems, like we've been pointing out, is still down in lower circuit today. So, and even PNB, so that stock too is down around 2% at this point in time. We're going to get you more updates in terms of what exactly is happening when it comes to this entire PNB issue. But we have other PSU banks which are not doing too well either. So something like Bank of India, which is correcting, and even the metal stocks not doing too great. Nalco, for example, is down today, and we have even something like SAIL, which is down and out. Jet Airways, post the conference call takeaways, that stock is down around 1.2%. Apollo Hospitals as well, not doing too well. So that stock down around 4%. Some statements coming in from the Mines Secretary that the pace of mineral auction is expected to double going into FY19. But Ashwini Gujral is here with us to talk about the technicals of the market. Then, Ashwini, over to you. Second half trade.
Well, what appears to be clear is that PNB's stupidity will cost the market a lot. And the way, banks are reacting in general, it's almost like, people are kind of reducing weightage on financials. I mean, State Bank, ICICI Bank, Yes Bank. So all of these guys are also coming off. HDFC Bank is also in the red. So this issue is not really sorted, even if you hold it to just one bank. And that chances are will possibly break the back of the market also, because every day you have 250-point Dow rally, and we open up and again we give up gains. So it's very obvious that at higher levels, who's selling? So there is institutional selling at higher levels, and people are probably getting out of financials a little bit. What's moving higher is IT. So money coming out of financials is going into IT. So that trade can play on, but we are going to underperform. There should be any question about that. Today, autos have also joined on the downside, maybe because of metal prices, etc. But in a weak market, you don't need to look for many reasons. As far as Nifty, Bank Nifty are concerned, we should at least get to yesterday's lows. So there isn't too much there. Individual stocks, Maruti is a sell with a stop of 9,000, target of 8,750. NCC is a buy with a stop of 124, target of 136. And Bank of India is a sell with a stop of 134, target of 122.
Fair enough. 20 points lower on the Nifty. So, I mean, it looked like it was accelerating or faster, 23, 25 points, but sort of little, I mean, it's there basically, 10,530 or so. Let's get some questions answered now. Sham is writing in. He's got 40 shares of Canfin Homes. He's paid about 555 rupees each for them. Wants to know whether to hold or sell. Question is Canfin Homes. Ashwini, what would you tell him?
See, my sense is that if banks sell off, maybe NBFCs could be marginal beneficiaries, but the stock has corrected quite a bit. 460 thereabouts was the low. So from there it had a sharp rally. I think it should be accumulated, in this decline. And chances are at some point you will get 600, 620 because the only safe assets seem to be, again, that's a reiteration that the housing asset seems to be safest. So maybe, post this correction, Canfin Home can move higher.
Okay, the second one is Ashwini Kumar, 3,000 shares of Graphite India, which has had a fabulous year. We all know that, at least last year at 860. Wants to know if he should hold or sell that stock.
See, I have a simple principle in all trading, investing, etc. that I don't carry a more than 10% loss. Now, if markets recover, etc., and it goes back to 1,000, 1,100, maybe he should buy again. But if 860 becomes 460, then he's in real good trouble. So right now, it hasn't fallen a whole lot, but 10% threshold is crossed. Now, who knows, when these things are likely to change. So if you must hold on, maybe give it another 50 bucks. But at some point you should get out, because anything that goes up 10 times can easily correct 50%.
Ashwini, thanks very much. Appreciate you joining us with that perspective, that advice and trading ideas as well. We take a very quick break here with news that market's still down about 20 odd points, so no change there. We come back and we get some fundamental perspective. Rakesh Tarve, Head of Research at Reliance Securities, should be with us when we are back in 2.